They say what goes up must come down. But someone clearly forgot to tell Rocket Lab's stock chart. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're deep diving into Rocket Lab, ticker RKLB, using data captured on October 8th, 2025.
Yeah, and we're jumping in at a really interesting time for the broader market. Pre-market looks okay, modestly positive, open suggested, but that feeling is, well, fragile.
Fragile how?
Well, you've got these recession warnings still flashing in the background, plus everyone's basically holding their breath for the FOMC minutes later today. It's a packed schedule.
Right. A tricky backdrop.
Exactly. Which makes companies with really clear, strong news, like Rocket Lab seems to have, stand out even more.
Okay, so let's unpack. Rocket Lab, RKLB, big player in the space industry, launch services, spacecraft manufacturing.
And he just got this huge vote of confidence.
Yeah.
Really huge. 2 massive deals announced in just the last, 48 hours?
Yeah, tell us about those.
First, a 10-launch contract with Synspective. That's actually their biggest single order ever from one customer.
Wow.
And then, bam, right after, a multi-launch deal with IQPS. So that's building a really solid pipeline for them.
And Wall Street likes it.
Oh yeah, very bullish. We looked at 13 analysts covering RKLB, over 60% rate at a buy, and crucially, 0 sell ratings, none.
Okay, incredible momentum on the fundamental side. Seems like a straightforward story, almost a slam dunk.
Well, here's where it gets complicated. The valuation, that's the dilemma.
Go on.
It creates this real tug-of-war. Because despite that fantastic news, those contracts we just talked about, our research suggests the stock is significantly overvalued right now.
Overvalued at over $60 a share.
Yeah, north of $60. Specifically, it's trading around 15 times forward sales. That's like way above the industry average.
Wait a second, hang on. You just listed 2 massive record-breaking deals. Analysts are all thumbs up. How can it be significantly overvalued? What are we seeing that maybe they're missing?
It's really about how much growth is already priced in. Maybe too much is baked in compared to historical averages, you know?
Yeah.
And this stretch, this financial tension, is why you see such an extreme split in the sentiment and how people are betting.
Right, the sentiment divide. What does that look like?
Okay, so on one side, you've got the options traders. They are showing just extreme euphoria, almost complacency. The put-to-call ratio, it's tiny, 0.16.
0.16. So what, more than 6 bullish bets for every 1 bearish bet?
Exactly. They are absolutely betting the farm on more upside. Pure optimism.
But then there's the other side.
The determined bears, the short sellers, they are not backing down. They're holding a really hefty 14.27% short interest.
14% short interest is significant.
It is. That's a big dug-in bet against the stock. It'd take almost 3 full trading days based on average volume just for them to cover those shorts if they had to.
Wow. So it's a real standoff.
Yeah.
Euphoric options players versus entrenched shorts.
Precisely. It's like the options crowd is celebrating on the deck while the shorts are dug in below expecting rough seas.
And meanwhile, institutions, our research mentioned money flow.
Yes, money flow indicators do show institutional cash has been piling in supporting this recent surge. That's undeniable.
So the big money seems to be siding with the bulls, at least recently.
Mm-hmm.
Is there anything on the technical charts that could, throw a wrench in the works for this rally?
Technically, the picture is strong. Very bullish trend. The stock's trading well above all its key moving averages. That confirms the institutional support you just mentioned.
Okay, so technically sound, but I sense a but coming.
There is a but, a pretty important one. Key momentum gauges, things like the RSI, they are now deep into overbought territory.
Overbought, meaning?
Meaning the buying has been maybe too fast, too furious recently. It suggests the stock is vulnerable, could be due for a short-term pullback, or at least needs to pause and consolidate here.
Okay, so pulling it all together, fundamentals look great with these new contracts, valuation looks stretched, sentiment is split wide open, technicals are strong but flashing an overbought warning. What's the final verdict for you, the listener?
Our take is cautiously bullish.
Cautiously bullish. Why cautious?
Because while that game-changing fundamental news is powerful and it's currently winning the day, you can't ignore the valuation stretch or that overbought signal.
So the new contracts are overriding the concerns, for now.
For now, yes. But you absolutely need to be aware of the key risks. 3 main ones.
Lay them out.
1, that technical overbought status we just discussed. 2, the stretched valuation itself. And 3, the potential capping effect of that big 14.27% short interest. Those sellers could provide resistance.
Right, a ceiling. So what are the key price levels to watch, the battle lines for the next few days?
Okay, for the bulls, the target is breaking that pre-market high, which is around $67.20. A clean break above that could really squeeze the shorts, force them to buy back shares, and add fuel to the rally.
And for the bears, or if you're just cautious, what breaks the bullish idea?
The critical level there, the point where the bullish thesis starts to look wrong, is a break below yesterday's low. That was $57.02. A move below that would be a significant warning sign.
So RKLB is definitely aiming for the stars, fueled by real contracts.
But its valuation might already be orbiting another galaxy. Given that extreme confidence clashing with the technical fragility, you absolutely need solid risk management. Think stop losses. Have them set.
Good advice. Okay, that's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.